Why do I stop buying stocks for now? Well, because of the fear, uncertainty, and doubt floating out there. And it's a lot, all right? So I'm going to share with you in this video why I stopped buying stocks, at least for the foreseeable future, because looking at the market conditions, looking at this, environment where there is a lot of uncertainty, there's a lot of fear. I mean, there is a lot of those things, even not in the stock market, even beyond the stock market, in the economy as a whole, in the real estate market, like in everything, there is uncertainty. So, based on that, I decided that, well, it's time to maybe switch a little bit of my strategy, because my current strategy, I have my long-term investments, all right, and I have my short-term investments, I have my medium-term investments, and I have swing trading, day trading plays on which I kind of, hop in and off based on where the market is going, all right, or how the market is performing on a daily or weekly basis. That being said, this strategy was allowing me to, allow 15% to go through my 401k. Not quite true. That was, a couple of years ago, but I switched it last year. 6%, because I work for a company that give me a match up to 6% of my contribution on a weekly basis or bi-weekly basis. So 6% goes to my 401k, and then 8% or 15% of my salary goes to of my income, not salary. My income goes to Roth IRAs. All right, those two are my long-term investments. Now, my medium investments. I have my brokerage account. I have two of them, but on a big one, the six-figure one, I have stocks that I'm holding for the next year or so, all right? And mostly those are in the energy and the travel sector. A little bit of, like a little bit of tech, and also just a bit tiny piece of crypto, all right? Now, for those, it's kind of medium long term. Now, when it hits some of the price targets I have set, I'm going to cash out and roll that out into something that will make sense for me then. Maybe a dividend portfolio only, maybe, buy some real estate property, or, get bigger, heavy into crypto. Now, I have a short-term, strategy where I do swing trade and day trade, some stocks based on the market performance, But the thing is, that will allow me to buy the dip in my medium-term investments and my swing trade plays, because I've been buying the dip for the last 3 to 4 weeks, but I'm still down. I'm still down more than 25% on some of the swing trades and some of the, my medium term or short term investment that I've been doing. So based on that, I'm observing that the market that we are currently in, it's kind of, you know what? I'm not sure. Nobody is kind of sure what or where we are going, because interest rates are like through the roof, right? The 10-year treasury yield was above 3%. And I believe that is what caused the significant sell-off that we had today. Energy, it's going high based on news on Europe, banning Russia oil once and for all. But even energy stocks are down 10% after reporting, stellar earnings yesterday and last Friday. Doesn't make sense, all right? Now, the other thing is crypto is also selling off like big time. Crypto is kind of mirroring whatever the NASDAQ is doing. So where is the place to stay? Real estate market. I mean, with interest rate increasing, it's gonna create a big correction. Maybe not as big as some people are expecting it to be, but I think it's gonna create a correction, because now with interest rates more than double what they used to be same time now last year, it means there will be so many people that are not going to be eligible to qualify for a mortgage. And on top of that, prices are already like soaring, man. So even if inflation, or when inflation peaks or start to slow down, I think it's not a good time, at least for me, to start investing into the real estate market. So what is the place then to kind of put my money to work? Well, with interest rate increasing, I'm expecting high savings accounts, or money market accounts on banks or certificate of deposits, to actually pick up, catch up, and pick up these interest rates hikes. Like right now, Capital One or Bank of America, the small banks like Regions and Trustmark. I think they are like 0.4, 0.3% on high savings. But 2 years ago, 3 years ago, these used to be like 2.5, 2.8%. I remember Ally Bank was paying 2.7% on high savings account. All right, so maybe it makes sense with this whole uncertainty going on in the market and the real estate market and not knowing where the economy is going, with recession or stagflation on, impact of coming from the conflict in Russia and Ukraine. I mean, there is a lot of just uncertainty. And that's why I think maybe time for now, maybe the best for now is for me, is to cash up, meaning start piling up. And I've been starting doing that, but for some other projects, some other investments I was kind of, preparing for. But now I think it makes sense to kind of, just stop for now, buying the dip and seeing where this goes, at least when we'll have a clearer, a better direction on the stock market. At least when you have a direction, it's better because not only, you can plan ahead, but also emotionally, which is, your emotional capital, which is really, 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 really important when you are an active investor or trader in the stock market. All right. Now, that being said, it may not make sense to you, but this is kind of what I'm seeing, and I may be wrong, but until I get a little bit more of clarity into where the economy, where the stock market is going, maybe it makes sense to kind of hold on cash now. So let me know in the comment section what you think.